you can create a strategy that is diversified, that has stability, and that can provide a better risk-adjusted return for investors.
Hello, folks, and welcome to another episode of Get Diversified. We're here with Mr. Chris Reece, and today we're going to be speaking to some of the diversified topics, and we're going to share a little insights in terms of, hey, what keeps him up, what makes him happy, and how is he diversifying the landscape in his respective ecosystem. So, Chris, welcome to the show, man. Appreciate it.
So happy to be here. Thank you for the invite and looking forward to our conversation for sure.
Sounds good, man. So, look, man, when we think about, diversification, what does that mean to you?
Yeah, it's interesting. So I've been just as a kind of to answer that question, I've been in asset management for almost 3 decades now. The first 15 of those were on the public side, and think of Vanguard and index craze of the late 1990s. And the idea was, yeah, you can get diversification very cheap, but with those public markets came a lot of volatility and quite frankly, lower diversification. And so 14 years ago, I transitioned to the private markets because when you look at the overall ecosystem, and there's stats out there, and you probably heard these, but if you look at the amount of companies in the United States, 95% of those are private. Even if you look at some of the larger ones, so specifically companies with 100 million or more in revenue, you have 86% of those companies are private, and you have 14% of those that are public. So if you're investing just in the public markets, you're missing 86% of the opportunity. So I got into the private markets as a way to really enhance diversification for investors. And so I've run a number of different strategies, but one of the benefits out of all those strategies is that they focus on the private markets, not public, and that enhances investor diversification and how that fits into an overall investment portfolio.
So look, you've been on both sides of both private and public, it was a bit good to kind of share and get some additional insights into that for our listeners here. But before we kind of jump into the meat and potatoes of it all, why don't you tell the folks a little bit where you're from, kind of your early on trajectories, and what kind of led you to your great progressions and where you're at today?
Yeah, certainly. And so I grew up in the great state of Maryland and then moved to Pennsylvania, went to undergrad and grad school in PA in Philadelphia. And so I've really stayed around the area for the last 30 years now. So it's kind of home. So if you haven't been here, we'll take you out for a cheesesteak when you get down.
Yeah, well, I'm relatively new. I've been investing on the other side of the state from you for coming on 20 years, but I've only been living there for a few. So, yeah, absolutely. We'll take you up on that. So, yeah, good. So, Philadelphia, and kind of share, I guess, once you share in terms of, once you started, you weren't always working in public and private and all these different diversified segments. Give a little, trajectory of terms of the process flow in terms of how you got to where you got to. So, what was the lineage of ecosystem? What was the growth segment for you?
Yeah, and the interesting aspect for me is I got my start at Vanguard out of college, and it was interesting, fantastic place. I still have a lot of assets with Vanguard overall, especially on the public side. I mean, when I started, you could get exposure to the public markets, whether it's the S&P 500 or even some of the bond indices for 15 or 20 basis points. Now those fees have continued to come down to where you can gain exposure in what we'll call the beta trade, right? Just general market exposure for pretty much free nowadays. But again, the other side of that is, those come with a couple of caveats, and that is that you get the potential for enhanced volatility within the public markets versus the private markets, which tend to have lower volatility and can enhance diversification. But I do firmly believe that public investments do provide a suitable part, or should be included in all investors' diversified portfolio. Because if you look at, it's hard to compete against NVIDIA, right? I mean, you get the returns even yesterday in the public markets where the markets were up significantly. But if you don't have exposure, you're going to lose some of that. So I'm a very, very big proponent of diversifying a portfolio across a number of different asset classes. When I got into the private markets, I'll give you a quick background on the private side, and we launched the first, what we'll call private BDC, business development company, back in 2009. And a BDC, for your viewers, it stands for Business Development Company. And the goal BDCs are to provide financing to either small or private U.S. companies. And so they really took off in 2009 because you had a disappearance of middle banking in America, and you had high demand for capital and a lack of capital to provide into that space. So BDCs, shadow banking, private credit funds all exploded in 2009 and even through today, where Blackstone has a fund called BCRED, and BCRED, they've raised $85 billion over the last 2 years. So still very much in high demand. But what I looked at what was able to generate a consistent and diversified return. And so when I left the BDC world, I looked at a number of different industries, and I came back to cannabis as one of those industries that is one of America's fastest growing sectors. You have a lack of capital to fund that growth, and you have zero institutional involvement in that area of the market. So you put those three together, and done correctly, you can create a strategy that is diversified, that has stability, and that can provide a better risk adjusted return for investors. And that's what I launched 2.5 years ago.
Thanks for sharing that on the kickstart of the cannabis ecosystem, which is different for many investors, right? Public versus private, right? There's a perception, there's a view. So let's jump in. Let's kind of get some more meat and potatoes around that. So when we think about the cannabis ecosystem, right? Where did you see, in terms of from your point of view, you've had a diversified set of segments you've worked on. Why cannabis versus other investments for you, particularly?
Yeah, I looked at cannabis as really one of those areas that was suffering from. There's really twofold. So it was suffering from a lack of capital, but it was also desperately needed, because when you look at and you take a step back and you look at the opioid crisis that we have in the U.S., if you can wean some of that down by introducing cannabis on a medical aspect, and it's not like taking OxyContin, right? You're eating a gummy before you go to bed to help with pain or anxiety or other ailments. That's generally a good thing. So the idea was to start a strategy that not only provided investors with a unique investment opportunity, but also help the overall industry that needs capital to continue to grow and be able to provide that capital to the broader industry. And the cannabis ecosystem, and we can talk for hours about this, but it's fragmented because it's still federally illegal, but it's legal on at least a medical basis in 38 states, DC, and U.S. territories. So you have this whole dynamic that you can't cross state lines with cannabis. So you need to grow, process, and sell cannabis in the state in which you want it to orchestrate that. So you can't cross state lines, which causes transportation issues. So you can't move across the border. But for states, it's a big benefit because they're able to increase tax revenue for their citizens. So last year, if you look at 2023, we generated on a national basis $4 billion in state sales tax revenue. And that could be used for schools, roads, social programs, infrastructure. And if I'm a governor, I can't raise taxes or I lose my job. But if I introduce a new sector or industry and I'm able to tax that and provide that tax revenue to help the lives and better the lives of our citizens, then that's generally a good thing. So there's so many nuances within the space, but it's, at its very core, it continues to grow. Although we saw yesterday with the presidential election, cannabis was on the ballot in 4 states. There was a big push to legalize adult use in the state of Florida. That did not go through. So it's still only medically legal. You had Nebraska, which did go through, and then you had the Dakotas, North and South, both oppose recreational cannabis. So we're slowly continuing to move out. And even if you look at the political landscape, while Harris was much more pro cannabis, and she even went so far as to say in her campaign she was going to push to legalize cannabis on a federal level. Trump isn't anti-cannabis, so it's really going to be kind of status quo. Things aren't going to progress, but they're not going to regress. So we look at the opportunity for the foreseeable 4 to 8 years as being still very attractive for our investors.
Okay. So you mentioned, wow, learned something new in terms of the ballot referendum. I guess 1 out of 4, right? In terms of got the overall approval, which is relatively low. So I mean, given your insights and your progression in this space, 38 states, there's some type of interactivity, right? We think about cannabis. I mean, you think about 3-5 years down the line, do you think other states will kind of jump on the bandwagon? I mean, 38 states is a lot in the union, so which could be viewed as favorable, right? If you think about optimistic. So we'll love to hear your viewpoint on that. Yeah.
Well, I do. I think we're going to continue to see a migration of more states continuing to come online. Texas is kind of the last big holdout. I would say that because Texas, it's not medical or adult use. But looking at from a state sales standpoint, in 2024, there will be 11 and potentially 12 states that have sales in excess of $1 billion on their individual state program. And so we're going to continue to see states legalize, if nothing else, to try to capture that sales tax revenue because it's a good way to fund the government coffers for social programs, etc. So I think that'll continue to move forward. And that allows us on the fund side to really have additional opportunities. Because if you look at I mentioned the demand for capital versus the investments. So today we estimate that there are about 40 times the amount of deals in the market versus capital to fund those deals. And so that from a portfolio management standpoint, it allows us to be extremely selective on behalf of our investors on how we deploy capital to ensure that we ample downside protection. As returns can go negative, but cash flow can't. Our goal really is to provide a stability and above market risk adjusted return for our investors.
Jacqueline and Melvin, thank you so much for taking time out of your busy day to listen to this episode of Get Diversified. Please make sure to subscribe to our podcast so you don't miss out on future episodes. Finally, stop by our website and follow us on social media. Ciao for now. Make it a great day, and we'll see you next time. And remember, get diversified.